Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Aditya. Clearly, if you go to see, it seemed to come in as a good deal of moves after we hit a high of 19,584 in trade today. But clearly, the markets have given up those gains and we're trading at the day's lowest levels. We've hit a low of 19,370 as we speak. So clearly, there is profit booking that's coming in on the day of expiry, and we had discussed in the morning as well that it is going to be a volatile day. There will be wobbliness in terms of where markets are concerned as well. Even in fact, Bank Nifty has given up those gains. It's interesting to see because overall expectation was there could be some bit of volatility in terms of a good strong expiry today. As banking sector had come back into the limelight, but that does not seem to be the scenario as well. To discuss more and what to expect from here on, joining us on the show is Jayesh Bhanushali, lead research at IIFL Securities. Jayesh, good afternoon and welcome to the show.
Good afternoon, Hiralji.
Uh, just my first question coming is what are you looking at from a level perspective? Because everyone expects some momentum in today's session, taking cues from the global markets and the comeback that Bank Nifty did make in yesterday's session as well. But it seems that the markets have given up gains in the last hour of trade. What's your read?
If you look at how Nifty and Bank Nifty positions are placed, so it is clearly visible that at the higher levels you will continue to see selling pressure in the indices as there is huge amount of call writing that has been happening in both the indices. So this is the base view that this weekly series was expected that it should close near about 19,400 level, which was the maximum open interest pain for the Nifty. And in the Bank Nifty, it was around 44,500. So basically, in line with expectation, the entire move has happened, and we believe that since today it marks the end of the third week of the August series, 4th week of the August series. Next week, we expect market to give a bounce back. So now, if you see how the monthly data is being placed in Nifty, if you see at 19,200 level, we have seen a huge amount of put writing. So this is clearly we expect that this would be the base for the index for the monthly contract. So now we have just like 5 trading days left for the monthly contract to expire. And my expectation is that anywhere around 19,350, 19,300 odd levels, maybe tomorrow, we will see the base formation happening and then we will see again market recovering back. So eventually, for the end of this August series, we are expecting that indices to close above 19,500 level. So from here on, you could expect around another 150, 200 points rally in the index.
Right. And how are you looking at Bank Nifty? Because clearly, the maximum OI addition in terms of Bank Nifty is happening at 44,500. What's the sense? Where do you see that breakout happening on the downside or the upside?
See, basically, if you look at the total open positions in the futures contract, so they are currently placed around 24 lakh, 23 lakh, 24 lakh contracts in the futures. So this is not very huge amount or a significant amount wherein we could see the indices breaking down. So generally, we have seen that whenever the total future position open positions in futures test about 30, 33 lakhs level, during those period of time we could see a euphoria in the index and then we could see a pullback or I would say a breakdown as you pointed out, but at 23 24 lakh open interest I don't see a huge correction happening anytime soon. So basically my understanding is that even in bank nifty we could see the indices bottoming out during the next couple of days and we could see a nice leg of recovery happening throughout the end of the September series and the throughout the end of the August series and start of the September series. So I believe next 10 to 15 trading session would be very good for banking index as well. And we could see indices testing 46,000 during the September expiry.
Right. Let's look at individual stocks. Coforge and Emphasis, some strong bullish setup seen in today's session on both these names. What would you advise investors to do?
If you look at how entire midcap IT pack has been placed, so all the stocks today, if you see Coforge opened gap down because of that deal. and then you see a straight away run up in the stock. And likewise, it had happened in persistent and emphasis. So basically, we continue to have a positive view on the midcap IT sector. Our topics are persistent, Coforge, as you mentioned, and emphasis. All three are our topics. And from here on, also, I expect the bullish momentum to continue, and we could see at least 57, 5800 levels in Coforge during the next quarter when the next quarterly results are announced. And even in persistent from here on, you could see at least 7 8% upside. So we remain positive on this stuff.
Right. Jayesh, how are you looking at a GMR? Because that setup also looks pretty bullish in today's session.
Yeah, definitely. If you see how the open positions have been placed continuously throughout the April series, if you see the top 10 long positions that have been formed in the FNO stocks, GMR continues to remain in that list throughout the entire month. So it is very clear that 68, 70 levels in the stock could also be tested during the upcoming week. So we continue to remain bullish, and even for our customers at IFL, we have recommended long positions in GMR. So I'll give you a disclaimer. Like we have been recommending it since 52, so we expect it to test 70 levels in the coming days.
Right. How are you looking at a Hindalco and trade today?
If you see the entire metal pack, our expectation is that the results have not been in line with the expectation. And even if you see how the entire sector is placed, I believe it is on a sell on rise. So, be it Hindalco, be it Tata Steel, be it Vedanta, all these metal packs, our expectation is that they will continue to be among the laggards and they would not perform during the next 3 4 months. So any up move in the markets and you see a rise in these stocks, it will be a great opportunity to exit or short sell.
Right. Jayesh, apart from the names that we discussed, anything else that comes to your radar from the coming expiry perspective that one should look out for?
Hello.
Jayesh, my question to you was any other stocks that come to your radar that one should be watching out for, apart from the names that we've discussed?
See, there are a couple of stocks wherein there is huge amount of long positions that is being formed. So firstly, in FNO space, I'll name Sun TV as my top pick. So we have been recommending Sun TV since 550, 560-ish levels since the last 2 3 days. I think currently it is around 575, 580. I believe Sun TV could be the dark horse for the upcoming expiry as well. And we could see around 640, 650 levels on account of a big technical breakout. And even in FNO, there is huge amount of long positions being formed in futures contracts. So Sun TV would be my top pick in FNO space. If you get out of FNO and you see the CNX 500 in cash segment, I believe Godrej Industries could do well during the upcoming month. And at 530, 520 rupees, it is a bargain. If you see a SOTP value of Godrej Industries, the sum of part value comes around 750 rupees. And if you see, it is currently trading at 500. So roughly 40 50% discount from its sum of part valuation. So I believe Godrej Industry could be the topic in cash segment.
Right. So that's one we should be watching out for. Thank you, Jayesh, so much for joining us on the show and getting us those recommendations as well. So that's with regards to where markets go. But clearly, you are seeing pressure that has built in the last hour of trade, and selling has creeped in terms of Nifty as well as Sensex. If you see Nifty below the 19,400 mark already, you have still Bank Nifty, which is pretty much on the borderline and outperforming the benchmark in the season trade. Nifty IT, the top gaining sector today, whereas Nifty Energy is the worst performing sector as we speak. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to Peak Prime.